Hi, this is ProExam. Welcome to this webinar where today we're looking at, do expats need to complete a UK tax return? And with the tax year coming up, at the end of October is the deadline for paper submissions of tax returns. At the end of January is the deadline for online submissions. Now with expats, you need the additional software. You can't use HMRC software, so you could still do a paper return, but generally you need to consider doing an online return, and this is a service that we offer expats who need to do UK tax returns around the world, living and working abroad. For more information, contact us at partnership.com, and you can stay in touch and find out information by subscribing at the link below. And please, share our messages with other people that you might find our guidance on relocation, tax, residency, and living and working abroad as need be. So as far as the UK is concerned for expats, and this is expats living in the UK or expats living outside the UK, do you need a tax return in the UK? There's two absolutes when you do need a tax return in the UK. If you are asked by the UK tax authority, HMRC, to do a tax return, then you need to do one. And if you've got any income, any taxable income arising, then you need to do a tax return. So it's a very, very, very simple situation. Even if you are expat to the UK, you may still have a tax liability that arises. There are certain incomes and capital gains that are fixed in the UK. So if you're working remotely and you've got a salary in the UK, that's pay as you earn. You may have an additional tax liability on the rest of your worldwide income. Property rental income, property sales, any capital gains from funds invested in the UK or pension arising in the UK are all income that arising in the UK, which are taxable in the UK, except if there's a double taxation treaty in place between the UK and the country in which you're living in, okay, in which it may allow the tax to be taxed in a separate way. So some incomes, some dividends, interests can be moved to a new location using the double taxation treaty. Some incomes, some capital gains are fixed to the UK, and therefore you do need to be doing a return. So if in doubt, the HMRC, you can check with that, and if in doubt, you should submit a return anyway. You can't just do a UK HMRC return. You have to do one separately, either by paper or online. And if you need help with that, you can contact us at partnership.com. Let's have a look at some other jurisdictions where the other jurisdictions where UK expats may be associated with, and do they need to do a tax return there? And let's just compare the slightly different positions. So first of all, expats living and working in Cyprus, the law changed here recently. If you've got any relevant income, any taxable income, then you have to make a tax return each year. The reason for that is that while there's quite a high income tax allowance where you can earn 17,000 before you pay income tax, there's flat rate health service taxes, there's a flat rate property rental income tax, there's a flat rate dividend and interest rate tax. So if you're a tax resident and you have those incomes arising, or if you're receiving income in Cyprus with those incomes arising, then those taxes become due. And unless you've got some form of exemption, even if it's done as a withholding tax, you should be completing a return in Cyprus. So for example, if you're in the UK and you've got a Cyprus property which you're letting out in Cyprus, you've got income that's arising and it's declarable in the UK, but actually it should be declared in Cyprus first. you should be paying the health and the property rental taxes in Cyprus, and potentially income taxes if your income is over £17,000 from that property rental. There are actually some other regulations on property rental, but that's not for this webinar. You can always contact us. Having said that, Cyprus is quite a good jurisdiction for UK expats because it offers a non-dom status. So new expats coming to Cyprus can register as non-dom and pay zero tax on worldwide dividends, interest, and property rental income for up to 17 out of 20 years, so for long term. So expats relocating to Cyprus may need to do a return, but as a non-dom registered expat, you will actually pay no tax in any case. The flat rate health tax in Cyprus, though, currently affects everybody with any real income. So if you've got any positive income at all, the flat rate health tax is a taxable liability that you have. The only exemption to that tax on worldwide income is if you're a state pension. But even so, that state pensioner would then need to register and get a special exemption certificate. So you need to be tax resident to get the exemption from paying that tax. For more information and guidance, contact us at productpartnership.com. Let's have a look at some other jurisdictions. Let's consider Australia. In Australia, it's essentially the same, but it's slightly different rules. So if you've got any income where there is no withholding tax is not taken, then you need to do a tax return at all, no matter how small. So if you've got $1,000 of interest in or dividends paid in Australia, if the withholding tax is not declared, then you need to do a tax return, even if you're not resident, even if you're living and working abroad. If you've got if you're a tax resident and your total income is in excess of £10,000, then you always need to do an Australian tax return. So that would be the conditions there. Let's consider being a Portugal tax resident as an expat. And Portugal has changed their rules. It used to be quite a low tax jurisdiction, but they've changed quite dramatically over the last few years. So they've got the high, the non-resident scheme, which gives tax relief for up to 20 years. The first thing to consider about Portugal is for nomads is if you spend more than 183 days in Portugal during a tax year, they will automatically deem you to be tax resident for that year. So even if you have 3-4 trips to Portugal, which are below the 90 days during a year, if your total days in Portugal for that year is more than 183, they will deem you to be tax resident and require a return from you. And remember, in the EU, with the Schengen zone, they're monitoring the traffic through the airports and for your day's residence. If you're an expat that's not resident in Portugal, you're just going there as a nomad to work, then non-resident expats are subject to a flat rate 25% income tax on their earnings. So if a nomad is in Cyprus, not as a resident, but just working in Portugal for that short period of time doing a job, they will get a flat tax rate of 25%. If that's not withheld at source, a tax return is due in Portugal to declare that income. The 10-year non-habitual resident scheme does offer quite extensive tax savings. In essence, then your tax liability will only a rise in Portugal on your Portuguese income that comes up, and it won't be not on your worldwide income. But you have to register for that non-habitual resident scheme to qualify for those rates and avoid the 25% flat rate tax. So all tax residents have to do a tax return in Portugal. If you spend more than 6 months, you go beyond your Independence Day, 4th of July, in Portugal for a year, then you'll be deemed tax resident and be required to complete that return. Unless you're registered in the right way in Portugal, you could be taxable on your worldwide income. Any Portuguese income for non-residents, expats, is automatically taxed at 25%. Let's go on and look at Romania. Romania have got some incentives for expats living and working abroad, but any expat that earns more than £4,500 a year has a tax return to do. But expats can just pay tax on a remitted basis while they're living and working in Romania. But if your tax status, then you're deemed to be tax resident full time, you then become liable to be worldwide income. So there's a borderline to manage for expats. So an expat can live and be based in Portugal. You can have property rental and potentially be taxed on a remittance basis with a consulting or a rental or income source. But if that any income that comes from within Romania will be taxed in that country. If you're deemed to be fiscally resident in Romania, which would be all Romanian nationals, then you'll be taxed on your worldwide income. They've got some interesting corporation schemes where you're taxed on turnover to quite a low rate. This is the opposite to Portugal. In Romania, if you've got any income arising in Romania, which is subject to withholding tax for dividends, interest, or any other form of tax at source, then you must do a tax return. So the Romanians say that if you've got a withholding tax that's been charged, that's not the end of the matter. They then want you to confirm that with the tax return. So the answer there is, do you need a UK tax return if you're an expat? The answer for expats is always, it depends. If you in the country in which you're domiciled or tax resident, then and if that's the UK, then if you've got any income, then you need to taxable income, then you need to do a tax return. If you're requested to do a tax return in the UK, then you need to do a tax return. So for a UK tax return for expats, if you've got any taxable income, you need to do a tax return. If the UK tax authority, HMRC, asks you to do a tax return, you need to do a tax return. Some incomes are fixed in the UK, and therefore they're always going to be taxable income in the UK. If it's very small, then you won't need to do a tax return. So if you've got a small amount of property rental income below 2,000, you could avoid that tax return. But if you've got a larger capital gain, that could be liable to a tax return in the UK. You may be able to get tax relief on that capital gain rising in the UK, but you still need to report it, even if it's a deferred tax that's not going to be taxed at source. Wherever you are tax resident around the world, if you want relief from your home country, your home domicile, your home tax residence, from tax in that country, there has to be a double taxation between the two countries. And this is the thing to check. We at Proact, we offer consultant reviews. You can book them online. either as part of the retained client service or as a standalone service. We offer free reviews to new clients to review any issues and understand for them and for us how we can help you. So stay in touch by contacting us at proactpartnership.com, subscribe to our YouTube channel, and share the information with expats living and working abroad. Thanks a lot for listening, and we'll see you again next time.